All right, all right. Good morning, traders. Hmm. Sandy's here. Excitement, an enthusiastic morning. Love it. Of course, I love it. Steven's back from his travels. Good to see you. Welcome back. Glad to have you. Good morning to you, Bob. Good morning, Greg. The gang is here, the usual suspects. I've got I don't know, 3 or 4 inches of snow. My son is up in Billings and it's spring break, and so we're literally up until we started on a conversation between my wife and he and I to see if the roads are going to allow him to shoot down here for the week. But I don't know. It's not great out in the west. A lot of snow, man. Tahoe and Donner's Pass, they got hammered apparently, like 10 feet in some places, 100-mile-an-hour winds. It was insane. We got a few inches out here. It's not that big a deal. Good morning, Michael. Good to see you. Good morning, Perry. All right. The gang is definitely all here. Let's get started. Welcome to the Market Watch Group Weekly Market Prep. I am Scott, and I will be your host. Let's get going. Here are the disclaimers, as always. Remember, educational, illustrative. We are not brokers. We are not advisors. We do not make recommendations nor provide guidance. Here is the agenda for today. Market posture. As we evaluated on Friday, it felt and seemed like it was going to remain pretty stable this week. I thought it might stay exactly the same. Actually, I'm not sure what would change, but we'll see. And what that means, we're sitting in a solid zone. We haven't seen any disruptions. We haven't seen any, you know, causes for concern, and we look for them actively. And in fact, we did. That's not true. The cause for concern that we've been finding has been in the VIX. There's been some just a little weird holding on to those elevated levels. It was never bad. It was just sort of like this looming kind of like, is it? Is it? Yeah. If you bought a hedge, I bought one, did okay on one, bought one, lost money on one. I'm okay with that. For a couple of early in the year hedges, be thinking about that. What did you do with it? Yeah, the more reflective you are, especially when you see things like what we saw. But other than that, the sectors have looked great. We saw a little spike in energy and a little spike in materials, but that's not defensive. That's inflationary. Our concern there, our concern there was not defensive. Our concern there was, that's going to make it hard for inflation to come down, which is going to make it hard for the Fed to cut rates. There's a lot of agreement right now that the economy is strong enough that if we don't see inflation drop more, the Fed will not go. That's what we're going to be watching for. Is That's why when we saw the potential for spending to be only at 0.2 and see spending down, to see sales down or flat, that's good. We need to that's where we need to see some, I guess you'd call it weakness, or at least some pausing in the strength. Very nice, Bob. Great week. Love it. Amazing. Need advice on placing stops? Absolutely. Let's talk about it. From article in July, US M2 money peaked. The first significant drop in a money supply. Oh, I need to look into that. What did they say the implications of that are? Um, Curious. Okay. Love it. I'm glad you had a great week, Bob. Bad for stocks. We'll see. We'll see. Sector searching. We'll do some of that. I think watch. Oops, sorry. Watch list maintenance. We'll look and see if there's anything in our watch list that we consider setting up for next week. And we are moving on to section 2 this week. So that's what we're going to do today. Let's dive in. Let's get into it. Yeah, here's the spreadsheet. Oh, Steven, I didn't. I told Steven I was going to have it ready. Oh, gosh. I got overwhelmed yesterday, Steven. I am so embarrassed because I had that on my list of things. He's shaking his head right now, and I can hear him saying, "Shame, shame, I know your name." It's coming, I promise. The one-step approach is coming. He said, "You should be ashamed." No, he's not wrong. He's not wrong. Okay. Now that I took extra steps that I didn't need to take and got my date extended, and I will share that as well because you guys know sharing is caring, in my opinion. Okay. Where's my charts? There they are. Oh, I forgot to relog in. I hope my charts work. It's iffy on Sundays. Have you guys noticed that? Like, I've been preemptively shutting it down, and then coming back in. So hopefully this holds up. Here's how we look. Looks. I mean, again, you haven't read any news. You don't know what's going on. Somebody just puts this chart in front of you. They say, "Hey, just based on technical analysis, what do you think? What do you think about this?" Yeah, be like, "Oh, it looks great. Looks bullish. It's going up. It's going up. It's higher highs, higher lows. Fantastic. No, I'm in." Not only that, but you'd be thinking it looks like it just completed a bull flag pattern and is moving in its next leg up. So bullish, very bullish. Okay, so let's go. Let's just step back. So the long term, remember last week on this break of the red line. So this red line, we actually already sort of scored this back here. When it broke out of this, we rescored it, and then we got to here. And then all of a sudden we got here and we broke out and we gave it another quarter of a point. We don't have a new trend yet. Who knows? We know, I mean, I think we could end up much higher as we get into April and May. Small pause and it keeps moving. We'll see what angle it takes. How long this short-term trend stays valid. If the short-term trend stays valid, we're going to be up here in the 550s. But there's nothing here to score for me. I don't think. I already scored it higher back there on February 25th. No? Was it just last week that we scored it higher? I thought it was the week before. What am I missing? Maybe not. Was it just last week? Last week. Okay. Oh yeah, last week. This one. And now we're scoring this one. Sorry. I'm getting my dates mixed up. Yeah, last week. We scored it higher on this breakout. This week, what does it tell us? It was right. We were right to score at that. Great. Is it worth another score? Well, we're already at 1.5. 2 is the highest it gets. We have no idea where that trend is. Absolutely not, right? It's good where it is. Okay. Love it. I appreciate your guys' comments because a lot of times it allows me to see, I think, your confidence building from your comments. Like you might not realize it, but when I ask and there's such certainty in answers of what you did, how you did it, what your score is, I hope you feel that in your perspective of the market, where you're like, yeah, I've got a better handle on what this market's doing than I maybe ever have. Hopefully that's the goal. In line, 1.25, love it. Love it. Okay, short term. So at short term, we're at 2. We've been at 2 for 1, 2, 3, 4 weeks now. Oh, thank you, Bob. I appreciate that. So let's go back. Let's go back. You can see exactly the trend, right? These 2 lines. I didn't draw them as a channel. You can actually draw channel lines. And then if you hover over them, they both kind of highlight at once. But anyways, I prefer drawing one line and then moving the other one out of it. So, but yeah, we've been in this channel. This is the 2. We stay in this channel, we're a 2. If it breaks above this channel, we'll go to a 2.25, right? If it breaks below this channel, we'll start to regress the score. But for now, looks great. We're in a good place. It's held up. There were a couple of times where we're like, ooh, is it going to hold? Ooh, is it going to hold? Both times it did. So yeah, I think it's good where it is. I'm a 2. Steven says 2. It is a higher high. It is a higher high. But if you remember, so this is a good thing to talk about, because back in here, a lot of the time our scoring was based on that concept. Oh, we broke the high. It's a higher high. Or we broke the high. Let's give it a quarter point. It made a higher low. Let's go. And because we really couldn't find a trend. I didn't see a, now looking back, you could sort of try to say like, well, was this the trend? But I don't know that it ever really was, right? Like it was, real time when you're at the hard right edge. We were not finding 2 points to draw lines and connect dots and find a trend, if you remember, right? But we're saying, look, there has to be a mechanism when you can't find a trend that you're rewarding or acknowledging buyers and sellers. I'm giving the buyers a quarter of a point for this, a quarter of a, and then eventually we kind of find it in a place where we're like, is this right? And then the trend shows up, and you'll notice we were very close when that trend showed up. We were sitting at a 175. We had been there for a little bit, so we kind of found our way to that, and then we got that trend, and it's like, yes, that's it. That's where I am now. That's what I see. Let me erase these lines. So I'm gonna leave mine alone as long as it now stays in this trend. It's a 2. If it starts to do something around the trend, then I'm gonna be like, okay, great. Now I need to adjust. Is it gonna slow down? Is it going to speed up? Or is it going to stay where it is? Volume could be interesting again. Oh gosh, I didn't think we were going to get 5% on Friday. But by the time it all rolled in, I think we did. Did you guys notice that? How did you score the volume? If you've already scored yours, how did you score your volume? I'm super curious because I'm all of a sudden thinking it might actually go up. Okay. Okay. Volume here. So at this point, all the old volume has dropped off, right? All the old volume has dropped off. We had a bunch of days. They've now dropped off. But it looks like we got this day here is was this above average volume? No, not enough. 76.4 versus 76.3. That's 2.2 million. That's not 5%. Here, definitely enough. We got 84 million against 70 million. That's 20% above average. What did it do? It was a doji, but it was a doji that advanced. We went from 506 and a half to 508. That's a point and a half. It's not a huge advance, mind you, but it's an advance. Sorry, I want to see this picture. Can't quite see your legend, but are you on a 20-day moving average? I'm not sure where our missing days are. But anyways, yeah. Let's see. Here we have above average, and here we have above average. Remember, our threshold is 5%. This is around 10. Average was 69 million. We got 77. So we had about 120, 110. So these both count. These both count. And I'll tell you, if there's anything that was, pretty close, this one was pretty close right here. That was definitely, but we're not doing pretty close. We're only scoring these. However, I am going to give both of these bullishness. We advanced and then we broke on these 2 days, which gives us 2 advancing, 1 declining. I was a 0.25, I believe. I keep drawing X's because I keep forgetting to turn this off. Okay. I was a 0.25. And I was a 0.25 when we kind of had a tie, but this is 2 buyers to 1 seller. And the 2 buyers are the freshest. Like it's like we just got 2 new days. So I actually think I'm going to raise mine to 0.25. I didn't think that was going to come. I thought it was going to basically be 1 and 1. And I was going to say, yeah, that's a tie. The most recent was this one. So I was going to leave it at a 0.25. But when we got this bullish day, 10%, I'm knocking it up. That's where I'm going. So like I said, I'm a little surprised. I thought I was going to leave it alone. I didn't notice. I must not have watched the rest of the volume come trickling in on Friday. We wrap up and I kind of set it down and go, having afternoon coffee. Anyway, Bob agrees. Okay, love it. Okay. Okay. Yeah, that looks right, Steven, right? Okay, what else? So we moved that up. We're back to the 7, possibly. We'll see. Major market. Major market. Boom. Let's restart this chart. Okay, so how did everyone do last week? How was your week? If one of the things you should think about on a weekly basis is now on Sunday, look back. On Friday, it's hard. You're still fresh when you're on Friday, right? And you're probably not going to shut down and then come back Friday night and do some post, right? That just doesn't. It's Friday. You're gonna go have dinner and relax. So Sunday morning is a great time as part of your weekly routine to look back at the week and say, how did I trade? Not necessarily was I profitable. Yes, we'd like to know that. But first, how did you trade? Did you trade well? Right? Did you adhere to the market conditions and the opportunities? And are you following rules? Are you right? And where are you hesitating? Right? Each week, assess it. Where are you hesitating so that you can kind of identify and be like, all right, why? What am I doing? Why did I hesitate here? What am I trying to do differently? Michael called that out early. He said, I want to work on my stops right now. Great. There are times where I feel like, and this is, you might not be there and all of a sudden you get there because as markets change, how we do stops has to change too. That's whatever we find is going to have to adapt again, which is why it's good for us to kind of have this ongoing, reflection where we look back and we're like, Am I needing to adapt my stops and I haven't yet? And if I need to adapt them, how? Tighter, looser? Don't tighten them as quickly, right? How much room am I giving it? Am I using the standard chart? Am I using the Heiken Ashi chart? You know, I'm a fan of that and trying to integrate that. So those are the things at any given time. Two things that if I stopped and I said, press, tell me the two things right now you're focused on. It would be like, I'm working on boom, boom. I'm working on letting my winners run, and I'm working on refining my entries off an intraday, whatever it is. Let's be specific this year, right? As we're developing these plans and we identify within ourselves, what can I do to trade better? Okay. Sorry, that was just a little soapbox moment I had. Everyone who's popped in so far has said that things were good. Oh my God, Sandy, amazing. Small trades doesn't matter. Trades are trades. Staying in some was nerve-wracking. Can be, right? I mean, that's the thing is, I'll tell you right now, my 5 best trades were my 5 hardest trades every time, right? Because you're just like, take it, take it, take it. Everything in your brain is like, take that profit. It's right there. If you don't take it, the market's going to take it, right? And you're going through these battles. Like winners are hard. We have to accept, like it's never where it's just like, oh, it's easy money. It's a constant thing where we're just like, okay, we know we need to be patient here. How can we convince ourselves to be more? I have the same impulse when I see traffic on the freeway. I'm like, I'm gonna get off. I'm gonna weave my way, and never works, you know. So I have to convince myself, be patient, stay on. Anyways, love it. Okay, what do we know? Nasdaq's leading. S&P's in the middle. We have this little back and forth between small caps and the Dow. The Dow, I believe, has shown bullishness, not like defensive bullishness, just like general everybody's bullish. I don't see defensiveness in the Dow yet. If we ever see the Dow kind of move up above everybody and the others just sort of sideways or even on a little bit of a pullback, that's concerning, right? That's boom, red flag. So when I say we're bullish, but we're looking for signs of weakness, this is one of our areas. We know the VIX. The VIX is always one, right? The VIX generates these automatic signals that are like, put a hedge on, because that's, when we see this, we tend to see escalation. Versus this is like subtle, and it's helped. There's a couple of times I could go back and specifically show where this was where the early information came from, where all of a sudden there was just this weird Dow, like, this funny little divergence in how money was flowing. And it's, you're like when you do something weird and your dog kind of cocks their head to the side, like, what the hell? I was like, what? I didn't know why. I couldn't figure out, but I went defensive. I tightened stops. I put on a hedge. I didn't pull the trigger on new trades. And when the market went into, a pretty sharp consolidation, I was in a great place. So we're looking. That's what I want to stress. When we look at this, we're not just like, oh, this is normal. Here's our score. I'm looking at that Dow. I'm watching to see if it ever starts to surge, but we're not seeing that, right? But I do want to make sure I'm flagging for us those areas where you do want to be a little extra sensitive to what the information means. What with the various periods, this is a question that came through from press, 200-day versus 22, what's the priority? So 200-day to 133, that's establishing context and starting to show momentum, but we typically are going to score at 66. Boom, boom, boom. So it's setting it up. Then if we're at 66 and we're confident with our score, we're going to score it. If we're not, then we might move to the 22 for like almost like a tiebreaker, right? Like, should I, shouldn't I? And then we let the 22 dictate. If we're already comfortable with what we've seen by the time we get to the 66, the 22 is just a look ahead. Like, what's going on? What's coming down the pipe you're not going to see it on those other charts, but it's also something that is not as strong because it's 22 days, right? Like anything, the longer the period, the stronger the information tends to be, but the slower the information, which is why we're trying to cycle through multiple timeframes. So as we go to 133, you can see we have more of the same. In that back and forth right here, the Russell is a little behind. So, that's part of where we're like, we haven't scored we haven't scored this as strong as it can be because of the concerns that we've seen. This from this time frame, we definitely see a bit of a concern, but when we actually get to this one here, we're like, oh, wait a second. From the 66, so when we look at the last 3 months, the Russell's actually the strongest. So yeah, it looked good on the first time frame, a little bit of a concern on the second, but when we get here, and this is more important, why? Because this is the most recent. This is what's been happening now. We see that it's in front. Is it enough to score it? I'm gonna to a 1, right? I think Sandy might be there. I'm gonna say no for me until I see it's just a little too choppy right? Like it's such a frenetic pace. I'd like to see it just stabilize a little bit, and then I'll be like, okay, I'm happy with it. I'll give it that. I mean, it's not that big of a deal in my scoring right now, right? The 0.75 to the 1 and what I am versus where that would make me, but I am giving it a little bit of room. And then, yep, just to kind of look ahead. In fact, Press, he said, just for shits and giggles, let's take a look at the 22. We'll always go there. Last week, I was thinking about it, and I said, I'm going to let the 22 decide. And on the 22, the Russell was a little underperforming, and we like, yeah, let's leave it alone. Here it looks pretty good. Here you got the NASDAQ, you've got the Russell, you've got the S&P, as we would expect. Like that's the bullish expectation. And then you have the Dow kind of pulling up the rear. It's bullish, but it's not as bullish. This is what our expectation would be in what we would consider to be strong bullish conditions, right? We have the general investing public is interested. Their appetite for risk has them pursuing technology, pursuing small caps. If that's where the growth is going to be, right? That's where it's already been. We can see, right? They want 7%, not 2.5%. And if you go backwards to where we started at the 200, they want 30%, not 18%. You can see the Russell starting to surge again, because if it's bullish, this is what the expectation is, that it's going to move on up into a leadership position, and for it to do that, it's going to have to advance. I think that the question mark here, this is a great time to pause, is interest rates. I find that I'm moving into I was a May, I believe, if I remember camps. Thought Press was a June, and I thought Michael was a July. And I'm starting to move into these later months. Tell me if I'm wrong. What camp are we all in here? When do we think rates are coming down? Because the economy is strong, and there's just no reason. They're not going to do it early, right? So you can see here, 96 to 4. It's definitely not happening in March. That's just 2.5 weeks away. May, we're at 4 to 1 against. It doesn't look like that either. June, 1.5 to 1.4, about right now. Press says he was June, but he might consider no drops. I don't think it's. See, I think that's. I saw someone come out with that, and my thought was that the Fed won't do that. I think, if anything, we get at least 0.5 point later in the year, but I don't, because I just don't think that it's going to be stagnant. I think that, that would basically indicate in maybe, election bump, maybe. But you got 1.5 to 1 here. Here's July's now. There's actually 2 to 1 that it's 0.5 point versus nothing at all. What does that mean? It means nothing. We saw how over predictive the market was earlier this year, where they're like, oh, it's going to be in March and we're going to have two, it was just like kind of insane. We all here were like, I don't think so. That's not going to happen. And you can see that the adjustments are moving more towards our expectations, and certainly we could be wrong. Of course, we're just sort of saying, hey, what do we think? And then we watch the market and see what does the market say. The great thing is the market hasn't really consolidated much during these adjustments, right? We're adjusting to lower expectations of rate cuts in small caps typically would be a correction, a 10% correction, right? That's what normally would happen, but it's holding up. So, the question is, can it hold up long enough to see the light at the end of the tunnel? People will just not quit spending, which is keeping the market strong. Yeah, no, I hear you, man. Right? I hear you. It's yeah, we do acclimate to the higher prices, and certainly bitch and moan. We're like, what? I have to pay this much, and then we go pay that much, right? So, all right, let's go back. Let's finish up sector rotation. Let me start this chart over. But like I said, we're watching. If we start to see jobless claims rise, if we see if we start to see that weakness, we know then we start to think, okay, we've got to be more defensive with what we're doing. We're going to watch a little bit closer. So if we see something like that, but we haven't scored it yet, certainly I'll let that influence my trading posture, right? Even if the market seems to be holding on, if I start to see signs of weakness in some of these core fundamental macroeconomic fundamental concepts, yeah, we'll pay heed. When we look at the sectors, again, technology and communication services, you can see looking back, every time the market goes up, these are leading. When we find ourselves in bullish times, we tend to trade a lot of technology and communication services with good reason. You can see financials. Whoa, what just happened? You can see financials strong. There's the market. You can see industrial strong. You can see discretionary. Remember back here in discretionary, we were a little iffy. And when it popped back up, we're like, okay, we're happy with it again. And yeah, what's happened? Money flow back in. Those are our 5 core. We know that on a shorter time frame, healthcare showed up and is participating, but not yet here. Here you can see energy is down, materials down, healthcare down. And who's at the very, very bottom? Defensive sector, staples and utilities. That's exactly what we would expect. If we ever start to see a surge in utilities and or staples, as we start to see other things, consolidating, we're gonna pay very close attention to that. We'll score it, but we'll also say, ooh, that could be a defensive trigger. So we watch short-term charts for defensive triggers. We watch the VIX for defensive triggers. We watch the sector rotation for defensive triggers, and we watch major market. Any one of these things could be the first thing that says, oh, look, this is concerning. And we can say, great, let's implement a defensive plan and make sure that we preserve until we come out of those conditions. As we drop to 133, more of the same. The strength of technology, the strength of communication services, which is technology adjacent. Financials, I mean, this is just clearly leading the market. These have been our favorite 3. No, that's not true. Actually, it was not. It was discretionary that back in the last year. But yeah, this year and since November, financials definitely one of the strongest. Industrials as well. Then you can see one level down. So this is the market. So one level down, we have healthcare, we have discretionary, and you can see this is where those materials are showing up. We don't love that. There's no reason for us. Hey, Leonard Jones, good to see you, sir. Welcome. Glad you can make it. Oh, yeah. You know what? I would assume someone will be in contact with you, so I'll reach out and let them know. Yeah. Staples. What is the significance of materials? So materials is more like the cost of like building things, right? So cost of plastics, cost of gypsum, cost of concrete, cost of right materials, and anything that falls into that, chemicals, things like that. So that would be, producer price index things. How much does it cost? Does it cost more to build something? Then those costs are going to get passed on to consumers, and inflation's going to stay high, right? So we don't love to see that. Um, Industrials and materials sometimes tend to correlate, other times not as much. But industrials is going to be your machinery and your big manufacturing, things. John Deere, Caterpillar. You're going to have your industrial, your defensive stocks in there, your railroads, right? Things like that. Um, so there you go. This is the time that home building surges, other spring cleaning. Yeah, could be. There you go. Could be a seasonal thing. Absolutely. 66 days. There's our basket up here at the top. That's what we're most concerned with, which includes industrials, a lot of strength. Financials, those two have been our favorite too. Anytime we're like, oh, we like, right? Those have been where we're really finding some trades. It's nice to see them at the top when we say, hey, we like these, and then we see them at the top. It's good to see that we're on the money there. Technology, we never lose confidence. Communication services look good. Healthcare. Healthcare is the fifth one in that group of five. Down here is discretionary. So they're continuing to come back, and I have no problem with them, but there they are. You can see there's your materials moving. Little bit of a little bit here on Staples, but not much. I mean, Staples is kind of a auxiliary bullish. Here you can see there was a little surge in energy. Here you can see there's no interest in utilities. So this to me looks great. I have 5 strong. I have 1 not far behind. Those are my growth sectors. Everything looks good here. So I'm going to keep it as a 1, but when we go to 22 days to see, hey, is anything coming down the pipe? What do we have? Discretionary leading. Industrials leading. Materials, okay. Technology, strong. There's the market, the S&P. You can see communication services not far behind. Yeah, everything looks good. You can see who are the lowest too, even on the 22. Staples, utilities, right? Looks strong. Okay. Okay, let's go finish this up. So that stays the same. Here is the last score. We're looking at the VIX, the IX. We had already scored the lower low. So it did get lower still. That's more confirmation of what we had. This was interesting in here because it turned and then it started up here and it pulled back. But remember, this was never a trigger because this was a lower low. That was our last time that we got like, hey, put a hedge on, and that one lost money for sure. I definitely took a loss on this. Not a big loss. It wasn't terrible because we have it on early, right? I'm here pulling back here. Yeah, the VIX it's an interesting one, right? So still have it? Okay. Okay. Well, if you're still hedging something, that makes sense. You do still have kind of something like this. Is that what you're seeing, Stephen? And you're not wrong. However, we do have this crisscrossed. We did have a lower high. And it's come all the way back down, and it has crossed here. But for me, I want to see if we pull back up, we have another lower high, and then I want to see a lower low. That's what would give me a quarter of a point here right? That would raise my score a quarter of a point and a quarter of a point here. If I get the lower high, I get it. If I get the lower low, I get it. And that would put me at a 1.75. That's about as high as I would get. But that's with the VIX back at 12. It's down, it's low. Yeah. I don't see any reason to change it. 1.25. I think we look bullish. We suffered through whatever this was. Market didn't really have too much. Why does the lower high get scored? It has to rise, but remember, if it rises, that's the market pulling back a little bit, right? The market pulls back a little bit and then does this. This would be a very minor pullback, meaning a higher low probably on the market. So another higher low with increased de-escalation. I know that sounds very strange, increased de-escalation, but with the subsequent lower highs, that would lead us back where we're in this. This is the goal down here. You might touch 11 sometimes, but living around 12. The only time I would hedge from now, Sandy, is if we had this signal, and as this comes back, if it turns, if it doesn't make a lower low, that higher low, that's the hedge signal. That's where I would be like, oh, Steven's right. Look at this. This thing is, and you can see it would make it be in kind of a triangular type shape where you're like, oh, it's just a little bit of indecision, which is what a triangle pattern tends to represent. So yeah, look, we're gonna be fluid with this thing. What we know now is it's still low. We're at 13. That's low. We have had we had a weird period like this, and then it came back down, and then it jumped again. And now it's kind of doing it again, where it went like this, but it's coming down. So the question is there a chance that this thing does one of these jumps again? We don't know. We're just watching. It's bullish right now. That's what I know. Been holding at 1.5. That's fine. I'm a one and a quarter. We're very close, right? We're very close. That's my final score. 7. Up a quarter. Everything looks great. Everything looks great. I mean, this is everything's up at or above the at least the halfway mark. Half out of 1, 1.25 out of 2. Some are even stronger. This looks very strong. We're very strong. Next week, what do we have? Nope, that's not what I wanted. Next week, what do we have on the economic calendar? Anyone playing with any AI tools? ChatGPT? Any ChatGPT fans? I love ChatGPT. Love it. Play a very nice role in your learning of trading. Ask it some trading questions. You'd be amazing. Copilot's pretty cool too. Yeah, Steven, these are more like generative AI, right? Where you're like, tell me a story about blah, blah, blah. Or you're like, how would I use the MACD oscillator in my trading? How could I mean, you can literally, it's amazing. Like, it's like Google, but on steroids. Like, it pulls the info, it organizes it. It's amazing. Anyway. Too much negative. Oh no, those are the people who are like, the internet's not going anywhere. They're behind the curve. Okay. What do we have next week? I love AI. Monday, nothing. Tuesday is factory orders. Yeah, nothing really on Tuesday. Then it kicks into gear. We have 2 things going on. How do you get into those? Actually, if you just go to OpenAI, you can click on their openai.com, you can download and use ChatGPT for free. They have a paid subscription. It's not much. It's like $20 a month, and that gets you like the better version. But literally, you can just go to chatgpt.com, I believe, or I don't know if it has its own URL. And it just pulls it up and you ask it a question and it answers. Amazing stuff, Michael. Spend a few minutes playing with it and you'll be like, yeah, that's pretty cool. ADP employment, private payrolls, that's first. Expectations came out. Or Bob said Copilot is included with Windows 11. So if you have Windows, Copilot's there. You just got to kind of dig around and find how to use it. It's the same kind of a thing. It's like Google, where it's like a search engine, but it's not bringing back. It's actually compiling information, answering questions. It can write things for you. You'd be like, write me an essay on blah blah blah. It'll do it. Just spit it out in 30 seconds, not even 6 seconds. ADP employment, 150,000 is what we're expecting versus 107 the previous. So more strength. Job openings is expected to drop by only only 100,000. Jobless claims is going to be flat. Productivity mostly as well. Non-farm is expected to come in at 210. Remember, last month it was expected at like 140 and it came in at 350. 210 is still growing. That's a very healthy number. 210 new jobs. Anything above 150 is right. We're not going to see anything change, and you can see unemployment expected to stay at 3.7. Okay, let's get to the watch list. Let's get to the watch list. Okay, where is my watch list? And let's get to the top. Apple. Look, we're rooting for Apple to hold on, right? We want it to hold that support level because Apple is important to technology. Technology looks good despite Apple in this struggle. So Apple starting to participate again would certainly benefit all of us. But I'm not looking to trade it. I need Apple to break out and hold above. Even if it doesn't get above its 50, I would still consider a higher low trade under the 50. As long as it takes out a previous high, takes out the consolidation. Nah, we need to see the buyers do more. We're not looking to do anything with this, but we are rooting for it due to its role as a leading company. AIG, we talked about this one. Would have been a nice entry back anywhere through here. And given this trade, looks like it's ending. I finished mine. Anybody in that? Let me know. But I'm now waiting for the next opportunity. AMD, that would have been a tough one. It was flagging, and we had identified the flag, and we actually even said it's almost like a mini cup and handle with a flag. So yeah, a breakout would be valid, and we were talking a little. If you missed the Thursday session, the last Trading Foundations, it went a little long, it was like an hour, but we went into the concept of automating trades and how you would try to do that with the alerts that are coming. And possibly you might like that style of trading where you look at it the night before and you say, you know what, if tomorrow, and you create a zone and you say, if tomorrow I can catch it in there because I believe it's broken out the time it enters. By the time it enters that box, that's where we believe the breakout begins. So you have an alert. Now, what we don't want and why we have a full box is if it gaps above the box. That's not valid. We don't want to enter anything above. Too much is too much. So we were talking about defining how to trade around that box. Essentially, you're looking for it to trade at or above one level, and then just on the open, at or below a second level. And it creates that little range right there. But if you could catch it, it would trigger so that you would say my entry level is here, and it would automatically trigger a stop below the previous day's low. Now you would put that in and you would say, there's my risk. Well, you can see if that was your risk, you're already at 2-1 on your way to 3-1, right? So That's the thought process. Because if you just come in and you think you're going to watch one of these big days and just catch it at the right time, that's tough. You kind of have to have the parameters outlined where you say, I know I have everything ready to go. I just, if it crosses this line, everything, all the dominoes start falling. So we talked about those orders if you want to go back and watch it. Okay. AVGO, Broadcom. Yeah. Communication services. Very nice, right? Same exact thought process. There's the consolidation, what we might say is the flaggish pattern. That's the sellers. They're not doing much. So if at any time the buyers just come do a smash and grab, you're saying, hey, I want to catch the smash and grab. Expensive options on AVGO. Yeah. Yes. Amazon. Amazon, same thing. Would have been somewhere on this day, and now it's starting to move. Now, if you're just kind of watching something on your own, we can always try to catch the Heiken Ashi on the turn. If you're uncertain, you take the first momentum day, which is this one, and that allows us to put a stop underneath it. You can see like this one, but yeah, okay. AXP gave a signal back in this area and is still moving, but looks like some of these financials are coming to an end. You can see that Boeing never did enough. Our consolidation line was just coming on down from here. It got up in one day. We're like, one day is not enough. And now you can see why. Still doesn't look good. BLDR, that was a tough one. It had its earnings. It pulled back. It would have been viable if you wanted to try to look into the here in these area. And now it had a great Friday, like a lot of people had a great Friday. BX gave a signal here and is starting to try to move. Citi did not. That's the problem. Placing stop too close, not enough room to pull back. Yeah, it's tough because you want to. I get it. That stop allows you to control your reward to risk, right? But if it's just bouncing you out of trades, then the reward to risk becomes less relevant. So I understand exactly what you're saying. I think this is still valid and at the same area. We had said we're looking to enter if it breaks above 56.05. And it got to 55.95. And so look, this looks great. It's pinching. If tomorrow it breaks above, I think it's valid. So there you go. And that's what I'd be looking for, is that type of a trade. Caterpillar gave it. That's a nice signal, nice turn. Capital One, not yet. ConocoPhillips, I'm not really into the oil. Costco, I got out of mine. And then it gave this, but I'm waiting to see if it's going to pull back, and then you've got earnings. So I don't know about Costco. CrowdStrike, same thing. It did enough back to the upside where I'm like, remember, it got hit from somebody else's earnings, but then it's recovered back up here. And now I'm like, yeah, if this thing were to do this, I would trade it. Problem is earnings are going to come right in that area. So I don't know what we'll do with that. We'll keep watching it, see what comes. CSX triggered, right? Here would have been the area, and you can see it crossed it. Did anybody pull the trigger on CSX? Let me know. I know a few of you liked that one better, but what happened? It went up, new high, pulled back, consolidation, and trigger. Valid entry on Friday. Did it give us the Heiken Ashi? Not yet. So are you late? Could we still trade into it? I think so. Especially if we could still try to catch it, underneath a certain level, underneath 38.40 maybe, and say, hey, if I can catch this, I think definitely this is a viable. Where is this? This is a railroad out of industrials, right? Railroad out of industrials.
Where was our first trade we liked? Citigroup out of financials. It's no surprise. So there's a couple already. I should be writing these down so I can put them in the so I can put them in the email. Citigroup. We're gonna put CSX on the list. I'm hopeful that the SMS is ready to go this week. So that we can get these alerts coming out and start. And I am gonna create a video with the parameters of how you would do like a first trigger OCO. So if you're a stock trader, you could just put the alert. I buy here, I trigger a stop here, I trigger one target here, one target there, and you can just have the whole thing all mapped out, and then you can come make adjustments as you need to make adjustments. Just because we have it start a certain way doesn't mean we're not going to come in every day, analyze and make adjustments. We're just, that gives us our starting point. And then I will do the same with how you would do it buying an option. So there will be videos, because I realized when you're doing those first triggers with conditions, you can get into the weeds a little. I'm only going to be doing it on the Thinkorswim platform because that's all I have. If you work on a different platform, your task would be to figure out, how do I correlate this? What order types do they have that would mimic this and allow me to build the same type of a trade? All right. DHI. I'm convinced now. Home builders were unconvincing for quite a while here, and now they're convincing me, which doesn't mean I'm trading into them, which means the next time they pull back, maybe it gives us the full like cup and handle. Okay. Sounds good. The Dow looks fine, still bullish. Ford, I know a couple people took it, maybe got stopped out. Some maybe are still in it. If you're still in it, I think it's still viable, but certainly you don't love this red candle. But if you look at your Heiken Ashi candles, those look fine. And you're moving your stop and you're riding it up. Still in, Sandy said. I love it. Okay. Fabulous. Up a little, Bob said. Fastenal, setting up. Put it on the list. Just made a great move. I think a few people traded this. Myself included. But yeah, this looks great. Pull back. I mean, I'm good with a pullback all the way to 70. Who knows how far it'll go? Been in since 70. Love that. Don't let it pull back too much more on you as it crosses down. I think it's definitely setting up for another trade. GBTC looks a little overextended. But I'll tell you what, I'm going to put it on the list because it could do the same thing. 3, 4, 5 day flag, and then it pops again. There's some euphoria going on in Bitcoin. GE overextended, but bullish as hell. Gold made a big move all of a sudden. Google down. Yeah, we don't love that. We'd like to see it recover, but market's holding up. Communication services holding up despite gold being down, or Google being down. Home Depot. Oh man, Home Depot. I was always skeptical, but look at that beautiful stock. Okay, next pullback, I'm in. I'm convinced. IBM, no. Intel, not yet. IWM looks good, but it's overextended. So won't be surprised if we see a pullback in the small caps. JP Morgan looks great, but there's no pullback. It really didn't give much of a signal. I like the other ones we've been trading better. Meta, strong, but overextended. If you were going to trade it, you were going to get in back in this area here as it pulled out of that flag. Why not Intel? Sideways too much for me. It's coming off at best same low, if not a lower low. And so right now the trend is sideways. It's under its 50-day moving average. So I'm thinking it could even start to find some stress even right here. So I don't feel like the buyers are convincingly in control of that stock. And that's what I want. I want to be like, yeah, buyers own it. Buyers are pushing it up, and that's where we're riding. I think AMD is a better chip stock. I think NVIDIA is a better chip stock, and we added one last week. TSM, Taiwan Semiconductor, is a better one. That's my thought. Meta strong. Microsoft gave a little bounceroo here on Thursday. I'd love to see that. If Google and Apple are down, we need Meta and Microsoft up, so doing their job. Look at Netflix. So Netflix was back here, and you can see it consolidated, and then it popped, and it had these 3 days, and then bam, it goes. And this is where it's hard sometimes to be patient, waiting. You have a little bit of profit, and you're like, that's what happens. Nvidia, you can see Nvidia flagged. Wow, I mean, it's tough to make that trade, and it's already going again. So if you're not comfortable trading these hyperbolic stocks like this, like they're parabolic, sorry, hyperbolic, parabolic stocks that really start to turn up. It's tough. They're tough to trade. If you can catch them, you can do great with them. It's a beast. Yeah, Sandy, absolutely. Picard. That's a flag breakout. Flagged, broke out, valid. I think you could wait for Fastenal or catch Fastenal. They're very similar, these two. If you look at your Heiken Ashi candles, I would say these are going to be pretty strong. Yeah, you caught that. It's great. Industrials, and these are the industrials you don't hear a lot of people talk about. People talk about Caterpillar, they talk about Boeing, they talk about John Deere, they talk, right? But this is where the money is. It's Fastenal, BLDR, car, the railroads. That's where we're seeing industrial money right now. Qs look great. Technology's fine. Ross Stores, that was a nice one. Did anyone catch this one? Out on Thursday? Right? You're going to always get out on a bearish engulfing on volume when it gives you this. And then we've got earnings. So I don't know if there's going to be a new trade there or not, but that was a nice catch out of consumer discretionary. SMCI, again, right? One of those parabolics. Are you looking to trade this? That's a tough one. I mean, it looks like it's bouncing, but ooh-wee. SPY looks good, looks bouncing. Oh, perfect timing for alphabetical order. Press SQ. You can see SQ kind of gapped on its earnings, and it gapped right into a cup and handle. All right, went up to here. It sold off. There's your cup. Gapped up. There's your cup. After the earnings, there's your handle. I would say that's viable. The problem with the cup and handle is it's got to break, and it's not. It's kind of like stalling. And if it fails the cup and handle, then I think it's going to end up back here. If it breaks below 75, it's going to 62. Yeah, I think it's viable to watch, but we definitely want to see if it's going to break that upper echelon of the resistance. TPR. Ooh, it's close. Put it on the list. Put it on the list.
This is a reminder.
Oh.
Water the bonsai.
I'm getting a reminder to water my bonsai tree. Perfect consolidation. What are we waiting for? A trigger. Looks good. It was a Christmas experience gift with my daughter. She took me to a bonsai place and we made bonsai trees together. It was pretty cool. Turned out amazing. It has a little Buddha statue on it. Pretty awesome. TSM. Let's see. Pulling back. Although to be fair, my wife was gonna give it to me and my daughter didn't have anything, so she's like, "Can I give him that?" Little turd. Okay. It broke out. I don't know. That's a tough one. I don't know if I would. I think I still want to watch TSM for a little while. UNP viable. Put it on the list, but it's UNP or CSX, right? There's no reason to trade two railroads simultaneously. 2 or 3 industrials, no problem, but not from the same group, right? And that's where, we're not huge on like diversification. We diversify by, other ways that we manage our risk, but I don't want to over correlate in any one group or sector. VIX looks bullish. Let me get out of this. Anything else on the list? Yes, waste management. Another one in the industrial range. So you can see we've got some industrial, one financial, one retail. Okay, we'll watch and see if any of them develop into signals. Walmart, I'd put Walmart on the list. I'd put Walmart on the list. It looks pretty good. Just went through a split. Absolutely. Real quick look through our groups and sectors. Biotech looks pretty good. The materials, unfortunately, looks pretty good. Communication services still strong. Energy, we don't love that it's trying to break out. That's not helpful to inflation, but financial still looks strong. Industrial still looks strong. Technology still looks strong. Staples looks steady. Utilities looks flat. Healthcare strong. Put healthcare on the list. Actually, that was triggered. Theoretically, it triggered if you like that signal. If you like Heiken Ashi, you're another day away. So I'm fine with either of those entry styles. Waiting for a Heiken Ashi signal is never a bad idea. You can see how it would have worked. So I've got XLV on my list too. Or if you had some healthcare stocks, I'd look through those. Lastly, real fast, I know we're out of time. I'm a little over. We are working on section 2 in the trading plan. That'll come at the same time, Stephen. Absolutely. The 3 exit spreadsheet as a viable option. We are working on section 2 this week. So really perfecting, like I said, I sense a lot more confidence in how you guys are reading the market, turning it into an objective, consistent process. That you're looking at what motivates and drives institutions, understanding the role institutional money plays for us as traders, right? They're creating the waves, we're trying to ride them. That's our symbiotic relationship. So work on that this week. We're on section 2 already, on the second pass for this year. Tomorrow we will have our normal opening bell session at 9:15 a.m. Eastern time. Tuesday, 8:30 p.m. options. We're back to options. 2 months worth of options. We will be doing a lot more. We're really not covering a lot more material. We're going to do a lot more application. We're going to have a lot more time to spend in the pricing model, right? So that we can build strategies, understand risk, see reward to risk ratios, be able to translate our stock analysis into an options trade so that we can be confident with the number of contracts that we're trading, with the exit strategies that we're putting into place, etc. So yes, options. It's great to see everybody. I hope you all have a wonderful rest of your Sunday. I hope the weather's okay where you are. And I will see you soon, as always. Yes, we will. We do want to see the 100 trades. You can send me yours, Stephen, and Press sent me his. I'm looking to figure out where I'm going to pencil that in for a bonus session. So thanks, everyone. See you tomorrow.